Hi and welcome to UK Front Row Seat, my YouTube channel dedicated to tracking and navigating the economic collapse of the UK economy. This is episode 5, which covers at a high level how a hyper-inflationary depression will come about in the UK. Before we begin, we start with my usual call to action, which is basically at the beginning of all of my video series. The reason why I do that is because I think it's important for you as the viewer to know upfront what I'm trying to do with these videos. Essentially the following. So first of all, if you haven't seen episode 1, I'd highly recommend you watch it. It just frames what we're doing here. Secondly, the consistent message, as I've said before, is to plan ahead, get your wealth out of the existing banking system, as the banks are going to fail again. Once they fail, you won't have access to any of your savings, basically. Buy physical gold and silver, whether that's bullion, coins, whatever it might be. There's a shortage at the moment, it's running low. Store it outside the banking system. Start prepping, Google this word, basically understand what you're going to need to do to survive what's coming, survive the hardship. That may be doing some panic buying, growing some food, learning new skills, forming a network. Which is my next point, create a support network of family, friends and neighbours, associates, because it's going to be very difficult for you to survive in the months ahead if you don't have people around you. Also, finally, keep abreast of current events and news, especially what the government and the central bank are doing and saying. Well, follow what they're doing, not what they're saying. Also, watching this channel will help as well. Okay, so we've spoken previously about how the central bank, the Bank of England, are increasing the money supply. They're printing money, which is going to lead to inflation. But that's not just the only component. That's not just the only factor which is important. Money velocity, which is a term that I would urge you to basically Google. It's basically the rate at which currency is exchanged in the economy. It's important because it's another factor of what causes inflation. So basically you need a high money velocity and a large currency supply. So from all that printed money, that creates runaway inflation. So inflation is made up of a high money velocity and a large currency supply. That's very important to bear in mind. Obviously there's other factors involved as well, but these are the two that are the main ones in my opinion. For now, inflation from currency printing has mostly significantly occurred in specific asset classes, such as property. I mean, that's obvious. We're all aware that property has increased in value over time. But consumer prices have also risen in some areas, and this is stealth inflation. So, for example, what I mean by that is perhaps they've decreased the volume of cereal you get in your cereal box. So instead of 450 grams, you get 400 grams. So that's an example of shrinkflation. So as you can see, property prices over time have increased. Essentially that's due to the destruction of the pound, the currency. That's one of the main determining factors. Yeah, obviously there's supply and demand factors that go in that as well. The CPI, which is the Consumer Price Index, has also risen over time. Here steadily rising as the currency inflates away. So as your currency becomes more worthless over time, other things become more expensive. So in summary, the faster the currency units change hands and the more money supply there is in the economy, the higher inflation is and the more rapidly it escalates. So if we have printed money, people are using that money very frequently, that'll eventually lead to hyperinflation. Why would they be using it very frequently? Because they want to get rid of it as soon as they can, because the value of that currency, those currency units, are eroding at a very rapid pace. Okay, so we've had the central bank printing a bunch of money, and some of that money, regardless of the money velocity being low, has found its way into certain assets like property, as we've just discussed. Okay, so why is money velocity so low at the moment? Well, basically it's because banks don't have any incentive to lend all that printed money that they've got into the economy. The reasons for that are varied, and that's probably going to be the title of another video. Also, people are still not inclined to consume and spend for a variety of different reasons. Obviously, coronavirus and lockdown, a lot of people have lost their jobs now. Times are difficult, times are hard. Why would I want to be spending money? I need to save as much money as I can. So as we can see here, money velocity over time has decreased. Also, when we look at household debt to GDP, we can also see that we're in a deflationary phase. People were quite happy to take on debt up until around 2010, but since 2010, just after the GFC, people obviously really shell-shocked by that event, so they've been saving ever since. So they haven't been taking on as much credit, as much debt. So that's why we see a fall in the household debt to GDP ratio. So these things contribute to a lower money velocity, especially when people are losing their jobs on an epic scale at the moment. The UK economy is locked down. So many people have lost their jobs. People are working at home. I took a walk in the streets the other day. It was just deserted. There's just no one around. In the States, 6.65 million people. That is just unprecedented. Recently filed for unemployment. What will be the number for the UK when those stats come out next? I don't know. I don't think I want to know. Right then. So even though we've got loads of money printing going on out of thin air, we've got low money velocity because people aren't spending. Credit is not being expanded. The banks aren't lending. So this essentially leads to deflation. There's no inflation, or there's no high inflation as yet. So the current situation is a death spiral for the government finances. Because we've got deflation, people are losing their jobs, the government's going to receive, for example, fewer tax receipts. So along with that and a bunch of other stuff, the system's basically frozen up. It's going to be even worse in the future. And so government response, central bank response, is going to be the same on a larger scale, ever more flawed actions. So as we've got a deflationary environment at the moment, we're going through a deflationary crash. We've had that in the stock market. We've seen it, right? We've seen that first massive hit. So taking this life cycle of a stock market chart, which basically looks at sentiment throughout the stages of an economic boom and bust, we can see, in my opinion, I think we are here on this little bump recovery. We've had this downdraft. Now we're currently, if you look at the stock markets, we're just bouncing. We're retracing slightly upwards. People think it's, oh yeah, look, it's all coming back to normal. How are we going to get back to normal, people? Like, look around you. How do you think anything is going to get better? So what's coming is this huge mega downdraft. So if you look at some of my, if you look at one of my other videos, I talk about where I think the stock market, the FTSE at least anyway, is heading. And that will be Mother Nature, deflationary forces at work to try and undo and clear out and normalize all the crazy wacky stuff the central bank has done. However, as I've explained in some of my other videos, the powers that be don't like deflation because it's their existing system that is deflating and crashing. They don't want that. They want to keep things going. So what will happen, we'll have this big deflationary crash, this second leg. We've had the first, I think. So eventually the Bank of England will be forced, they'll come up with some excuse to directly, not indirectly, but directly monetize and finance government debt. Basically that means buying government debt not via the financial sector, but literally off the treasury. That'll basically also lead to helicopter money for the citizenry, basically just people getting checks in the mail or their funds, their bank accounts credited with digital funds, whatever they might do. Definitely helicopter money is coming, free money for the masses. And that's when money velocity, which is really what we're talking about here, the second part of high inflation, hyperinflation, that's when money velocity will begin to increase on an exponential curve. And this is a really important part here. So inflation will set in and eventually the currency will just implode catastrophically against real money being gold and silver, platinum, palladium as well, under high hyperinflation. Now, the question remains whether interest rates at this point will be jacked up to save the currency. Watch my other video about currency being the release valve. You'll understand a little bit more what I'm talking about here. The thing is, in order to save the currency, which they will need to, because once the currency's gone, gig's up, right? That's it, end game. The thing is, if they raise interest rates, they're going to totally implode the existing debt load upon themselves. So regardless, the existing system as we know it is finished, either through a deflationary or hyperinflationary depression. Throughout history, hyperinflation has been what they've chosen. they're both types of default. The reason they've chosen hyperinflation, because it's more insidious. You can kick the can down the road a bit longer. Governments, people want to be voted again, and if I say to you, I'm looking for your vote, basically we're going to have a deflation, everything's just going to blow up, you're not going to vote for me. If I say to you, oh look, everything's going to be all right for a good period of time, you're going to vote for me, and then obviously inflation picks up and then it just blows up anyway. But at least I'll get a few, maybe, I don't know, a few more months, a few more years out of my political career. Hopefully by now you're realising that the cure to all this is sound money, gold and silver. Gold and silver reserves in central banks are important. They hold gold and silver. They know it's real money. They know that they need it in times of catastrophe like now, when they need to reliquefy the system and start all over again. It's all based on gold and silver. The more gold and silver you have, the better you can set things off with. The existing system has to fail mathematically. It's a Ponzi scheme, remember. So it's important to have gold and silver. Now, looking at this chart, this data shows the UK, which is the blue line here, versus China gold reserves, which is here. So who do you think is going to do better in the future once everything is reset? The UK basically having very little gold, or China having a load of gold? So power and wealth is shifting east from west. The West has had its heyday, and now it's going over to other countries, other economies. That's really bad for us in the UK. Hopefully by now you've understood how to protect yourself, so you're not going to be at the mercy of what's going to happen. I hope you enjoyed what I've been speaking about today. So basically, in essence, large money supply doesn't just cause inflation. You need also a high money velocity, which basically means people exchanging units of currency very quickly, because they know tomorrow if they keep that unit of currency, it'll be worth less. So they need to spend it now to get the most out of it. Before we finish, just wanted to give you some recent coronavirus news. I thought this is quite amusing, only in terms of what we're talking about economically. Obviously, it's a tragedy that people's lives are being lost. But basically, the Chancellor is setting out an extra £750 million for funding frontline charities. That's great. We like to hear that charities are supported, obviously. However, just bear in mind, it's a double-edged sword. This is help in the short term, but it's just going to add to the debt pile and exacerbate the economic collapse to come that we're going through now. It's going to exacerbate the inflation that we're going to be seeing. It's going to exacerbate and make worse the terrible hardship that people are going to suffer from in the future. Why? Because where do you think they're going to get the money from? They're just going to print it. They don't have it. So really, my last point here is, yes, it's a terrible situation, but really we only have the Bank of England, the government, and the existing monetary system to blame for all this. If we were on a different monetary system, the impact of coronavirus may not be so bad. Something to think about, food for thought. Welcome for any discussion points in the comments. People, I hope you enjoyed this video. I hope you're enjoying the series. I hope you're finding it useful. I hope you're learning things from it. It's quite enjoyable to do, actually. I'm glad that I can contribute to the YouTuber sphere and get information out there to everyone that I'm hoping will help you and help navigate this economic crisis that we're going through. As you can see, I've got my subscribe button here. I've posted my playlist of all my videos here as well. Please share this with your friends and family and associates. Please give it a thumbs up, give it a like, and if there's anything that you'd like me to talk about or discuss in the future, just post it in the comments and I'll see what we can do. Thank you very much. Take care.